Global oil prices are steadily rising on Friday after jumping by 3% yesterday. A sharp rise came along with the ongoing concerns over supply shortages. Geopolitical risks may also lead to supply disruptions. Earlier, analysts at Morgan Stanley predicted that oil would advance to $100 per barrel. Crude prices were last seen at the level in the September 2014. Goldman Sachs has the same projection. Oil stockpiles will continue to decrease. It's estimated that crude reserves may drop to 2 million from 3.4 million barrels per day. The recent weakness of the US dollar also supported crude prices. Since the start of the week, the US dollar index has lost more than 2%. In addition, a massive winter storm has swept through the United States, which is another bullish factor for oil as demand for heating rises. Brent is projected to hit the high of in October 2014. Traders have made several attempts to push the price above the level of $90 per barrel, and finally the price has managed to halt above 91.50 at the end of the week. What should we expect in the short term? Will the bulls stay at the new highs, or will the quote pull back from them? In the course of an uptrend, Brent approached the peak of the upward cycle. For the price to continue its bullish run, buyers need to keep the quote above the $92 level. Otherwise, the asset may enter a sideways channel in the range between $88.30 and $91.50 per barrel. Today, we can observe a strong movement in the forex market, but the ruble seems to have taken a break. Its pace of growth is very slow despite a favorable fundamental background, which the Russian currency is downplaying now. The geopolitical situation is still a strong factor. Despite positive market sentiment and the rally in the oil market, the Russian currency has other risks to watch for. The EU sanctions against Russia and rising tensions between the two countries may weigh heavily on the ruble. At the moment, the dollar-ruble pair is trading flat in the range of 75.80 and 76.80. After that, the quote may start a new upward cycle. The best trading strategy for now is to trade on a breakout of any boundary of the sideways channel. Gold has shown moderate gains on Friday, despite consolidation above the level of $1,800 per troy ounce. The position of gold is still unsteady. Investors are currently hesitating to buy the asset. The reason for this is that the US Treasury yields, a safe haven alternative to gold, increased yesterday and continued to move up on Friday. Today, traders are focused on the macroeconomic data from the United States, where the final jobs report for January is due to be published. In addition, the data on inflation will be released later. Usually, these events serve as strong drivers for the market and may set the tone for the next week. Gold is likely to be volatile as well. If inflation jumps above 7.3% on a yearly basis, gold may drop to January lows amid a massive sell-off May. In the meantime, the precious metal is trading sideways. The asset may appreciate given that certain technical conditions are met. The first buy signal may appear when the quote moves above $1,812, and this can be the first step to recover after a recent decline. We hope that our review will help you develop the best strategy for profitable trading. We wish you a successful day and see you soon. Have a nice weekend.